All right, cool. Yeah. Welcome guys to the Masterclass. I am going to be breaking down everything. We're going to go in depth. We're going to have a good time today. I'm going to be sharing the strategy that allowed me to catch well over 1,000 pips on gold last week and to be able to gain well over a 20 R multiple and barely take any losses. When it comes to before getting to the actual charts, one thing about me and my strategy is I personally do not care about win rate. I care about making money consistently, and I care about more about R multiple, because there could be some weeks where I have a 90% win rate. There could be some weeks where I have a 50%, some week where I have a 70%. There could be some days where I have a 100% win rate for that day, and then the next day I may have a 90% or 80%. It really just depends. But at the end of the week, my R multiple, because I may take some losses, I may have a red day, but at the end of the week, my R multiple may be a 1 to 10, 1 to 15, 1 to 20, depending on the type of moves that I make. So that's the very, very first thing for me when it comes to the actual strategy. And I'm actually in a GA position right now. I'm going to break this down in a second. Actually, no. Actually, I'll break this down first since it's better to see like the actual strategy live in effect and why I'm in this trade and what I'm looking at with this position. So, I don't know why this YouTube thing is not working. I don't know why I just don't know why it's not sharing my screen. Like I shared the entire screen. I don't know why it's not working. Whatever. It's all good. It's all good. We're just gonna adjust. But when it comes to the actual trade on GA, one thing that I noticed, like top-down analysis, I'm gonna show you how simple this strategy is, simple trading is for me. So the foundation of my trading is this, and I'm gonna actually type this out as well while we do this. The foundation is market structure, market that's not how you spell structure. Structure. Two. Support or key areas. So support slash resistance. So key areas. I'm just say key areas. And three is candlesticks. So for me and my strategy, all three of these have to be present. If one of them is not present, if one of them is missing, that is not a valid setup, and I do not take the trade. If all three of these are present, I execute the trade. I don't hesitate. Only thing that I'm focused on is managing my risk, understanding what my stop loss and my TPs are, and go from there. So first things first is I was looking at GA on this daily time frame. As you can see, GA has been in a very, very, very big range. Very big range since about March of this year. And every time price got up into this resistance, it came down back into this area of support. So I'm looking at the potential of price could come back down into this area of support at 2.05 for GA, right? So me understanding that it's a bearish trend, all I simply did was go down to the lower time frames. And for me, I seen price once again, market structure is bearish, so we got that checked off. All I needed to see was price trading at a key area, and I needed a candlestick entry, which I did get here. If I go down a little bit lower, actually, I'm teaching with black charts. And I forgot that my fault because this is how I trade. I trade with black charts. So let me go to the actual teaching chart. My fault because it's I usually trade with black charts because I understand the candlesticks, but a lot of people don't understand the candlesticks and understand like the bullish, bearish, and engulfing. So I gotta actually go to a color chart. So for me, when it came to GA, price was trading at this key area. It's a overall zone because when it comes to key areas, you got touch, gap, overlap. Touch is when price comes up to an area. Let's see, let's find a good zone right here. Boom, right here. When price comes up to an area, your zone, and it touches it, like almost to the T of it, and it rejects it. Then you have a overlap when price would break above a zone and it comes right back below. and it doesn't like retest and hold to continue. So that shows that this is still being held as a resistance. And then you got a form of a gap, which was this right here, where price came up here and it gapped this area of support. So for me, price was trading at a key area. Price was bearish. And the entry method was very simple. All I simply did was go to the lower time frame. And once I seen this bearish, it's more of a shooting star, but once I seen this shooting star candlestick form, I decided to enter my trade because all three of my confluences were there. Gave my stop loss a good enough breathing room because for me, I'm still scaling into this position. At one point in time, I was all the way, in profit down here, and then price came back up. Now I am kind of close to break even. But as long as structure does maintain, because one thing about like technical analysis as a whole, the trend is always more powerful than a counter trend. The trend is way more powerful than if you see a bearish engulfing and a bearish trend holds way more weight than a bullish engulfing in a bearish trend because that's just a retracement. You can have a scenario where price could literally, I'm gonna show you some good examples real quick. Because this is why I don't like get worried or afraid of bullish candlesticks in the bearish trend. As long as I understand where my key areas are, where my key structure points are, where price has to break below, then that's all that really matters. So you could look at this, for example. You could see this was a full-on hammer. This was a full-on Maribosa, basically. 90% of the candle was full. This was a full-on candle right here. And you would think, oh, price is about to, oh, higher low, price is about to break up and continue to go bullish. But the overall trend right now is bearish. And look what happened the very next candlestick. Boom, price came right back down below. Same thing right here. This full on bullish candlestick. The overall trend is still bearish. Boom, this holds way more weight and price came down here. Let's see, even for, let me see an example right here. This big bullish candlestick and what happened? Boom, evening star, boom, price drop right here. So same thing right here. This hammer right here that formed, this could signify a potential retracement where price could come up some more. But as long as price maintains below this zone, then to me that is valid. My longer term TP is down at 2.05, basically 2.05. And I'm going to look to potentially scale into this position even more. Because I'm not fully scaled into this position yet because these were some aggressive entries. I wanted to see it didn't happen last night. It could potentially happen now when I was trading, but I wanted to see like price came down, boom, created a lower high, and they continue to go lower. If it does that right here, price comes here, boom, potentially creates a lower high, then I'm going to add or more to this position, and I can move my stop loss lower because now price is creating a lower high, and I don't have to have my stop loss way up here anymore, and I can have much of a tighter stop loss, which would give me more room and less risk on the table to add another position. And when I'm scaling into positions, this is like just goes over the whole strategy. When I'm scaling into positions, I am not. I use my bigger lot sizes at the beginning of the trade, and I use smaller lot sizes as the trade goes on. In no reality would I use the same lot size that I use up here down here, because that doesn't make sense. Because price could easily come back and retrace, and this little retracement could literally diminish all the profit that I made, from this. So that's why I always like use my bigger lot sizes at the top and then start using the smaller lot sizes as I scale into the position. So that is this GA trade. As you can see, it's very, very simple, not complicated whatsoever. And yeah, now I just simply just wait. That's why I said I don't care about like retracements and stuff. Like you guys saw from that gold trade, I was in the trade for 28 hours. I was in drawdown and in profit for a little bit for, I want to say 27 of those hours. Probably I want to say 24 of those hours. For 24 of those hours, I was literally like in a profit a little bit, back in drawdown, and then literally in 1 hour, Jerome Powell started speaking, and then boom, gold flew all the way up to the TP, which is right here. If we look at gold, boom. Where was that? This was the trade right here. My entry was over here that Thursday morning, and then price flew up. I ended up getting out here. I got back in again Monday for this little bit of a move. I didn't catch this move right here, but I caught this move right here all the way up. Price came down here. I caught all of this move up here. Price came down here. I caught this move up here. Price came down here. I caught this move. And then price came right here and I caught this big move up right here. And I ended up getting out like here. I still could have held a little bit longer, but this was a very, very big trade for me. This was Friday was my biggest trade of the week. So for me, I was just super grateful for that. And then I ended up just closing out here. And then as you can see, look where gold ended up getting to. The main TP that I talked about at 35 100 flat. Now still do see gold potentially getting way up here to 36 500, which could potentially happen within the next 2 weeks because this is the NFP week. Obviously, the market's not going to do anything super duper crazy today because it's some holiday. I don't remember which one it is, but it's some holiday. But yeah. So NFP is this week. Next week is CPI, but the big driver for this gold in any pair, which is why you can see a lot of pairs have been consolidating. A lot of US pairs have been consolidating for a long time, especially gold. The big, big, big driver for gold is going in any US pair, especially indices as well, is going to be the middle of the month when the Fed does their um when the Fed does their talks about the monetary policy about cutting interest rates, which is most likely going to happen. And if that is the case, gold is going to finally potentially break, even it probably could do that this week, but break out of the zone and continue to go higher. Every US pair is going to, GU is going to go up, is going to fly up. Gold is going to go up, indices is going to go up, GA's GA. But any pair against the US dollar is going to be constantly weaker. And just to go more in depth on this, about how weak the US economy is, like you guys got to understand. And another big thing, like the most important part of my trading that you guys in the mentorship, you all know this. Good morning, Knight. If you want to, Knight, pull up, use that Zoom link that I sent in the chat and join that because for some reason YouTube is not allowing me to share my screen so you guys can see this. So just join the Zoom link and come pull up with us. But you guys know this, but the biggest thing of my strategy, the most important thing for me is God. God is always at the center of my trading. God is always number one. I always keep God at the center of it. I love to get into the Bible because the Bible is literally the Bible tells you the past, present, and future. Exactly what's going on in the world, it says what's going on in the Bible, which gives me more confluences, more confidence to trade and flow with the pairs the way that I do. Because it talks about in Revelations that, hyperinflation is going to be a thing where there's going to be a point in time where a day's worth of work is going to cost a loaf of bread. So a loaf of bread is going to cost a day's wages of work. What is going on? It talks about this what's going on in the end times, all the things that are happening in the end times. In the end times, this talks about how good is going to become evil, evil is going to become good. But what is going on in today's ages? Inflation is increasing, increasing, increasing. People are losing their jobs. Like you've seen the NFP reports, you've seen the unemployment claims. Their jobs are getting replaced by AIs. Inflation is going crazy, and inflation is constantly increasing, increasing, increasing. So the dollar is basically weak. Like, think about it. Like, if you guys are in the US, how much cash do you carry? Like, most people don't carry cash on them. Most people like barely carry cash. They always have their card. It's rare that people carry cash nowadays because the dollar is just constantly losing its value. And if you want to look at that from a perspective, people would think it's like, oh, the dollar's getting better, the dollar's getting stronger. No, it's not. No matter what the Fed says, like they cannot stop Bible prophecy. And all it is just a bunch of confusion that's going on, but to not cover up because the whole agenda is right there. Everybody can see it. If you have eyes to see, you can see it. So it's nothing like confusing. But let's just look at the dollar over the past few years, right? Let's go to a monthly time frame, right? Let's just go to a monthly time frame. Let's look at the dollar. Look at where the dollar was. This is the DXY, which is the dollar index. It's basically the dollar, right? Look at where the dollar was in 1985, way up here. the dollar has never gotten that higher since 1985, and it has constantly been decreasing since then. We had a nice peak in 2001. What happened? Boom, all of this happened. Boom, like the stock market crash and stuff in 2008. But here, boom, price came back up here. And what did it form? A double top. Price is bearish. I could see the dollar dropping all the way down here. That's how weak the dollar potentially is, all the way down here to basically $90 flat. And if that is the case, gold is going to fly up and finally break through those zones that it wasn't before. So that's something to keep in mind. The dollar is constantly getting weaker. It's not getting stronger. Like it's literally been on a downtrend, a longer term downtrend since 1985. So keep that in mind. Look at the dollar now. Like if we just look at it the past few months, look at what's been going on. This was all year. Bearish all year. It was one little bullish month of a retracement. But remember what I told you guys, and um a bullish candlestick and a bearish trend does not hold as much weight as a bearish candlestick and a bearish trend. All price did was simply come back up into this area and retested it. But the dollar is constantly losing its value, is constantly going to drop. And if that is the case, look at the opposite. Look at its opposite. If the dollar has been dropping all year, look what gold has been doing all year. Literally all year. The dollar has been dropping, and what has gold been doing? Constantly rising and rising and rising, which is why taking buys on gold and holding these buys for longer periods and being confident in the buys is so much more valid than just trying to take quick scalps and trying to take sells. Like there's no point in taking sells. A lot of people, and this I remember this back in, I want to say, was it last year or the year before when gold reached the all-time highs that it was before. And I remember a lot of people was thinking gold is like, was it here? Yeah, it was right here. It was, I think it was like roughly over here where gold hit these all-time highs. And a lot of people was thinking, it was like, oh, people were starting to sell gold because they was thinking gold is about to drop, gold is about to drop. Yep, gold reached all-time highs, is about to drop, and it never did. And it's not going to, not right now. And then I was also reading as well, it's like overseas, people overseas with like gold, they were being a little bit more patient with gold, but now since they're starting to buy more gold, which is we can see gold is pushing up as well. So gold is overall bullish, and you see all of this ties into how I was able to flow with gold all week. Um, sorry, I got my GA chart up here because I'm trying to see if I can scale in and add another position here pretty soon. But go all of this ties into the reason why I was taking buys this entirety of the time, and I was applying the strategy here. This is a trade that was on YouTube. Price came down. Let me go down to lower time frames. Let's go down to a 30 time frame just so you can see. Here, I entered buys here as well. Price pushed up, got out here. Price came down. Boom, price started ranging and rejecting here. I ended up getting in buys here again. And once price pumped up, came up here, came down, created a higher low, I decided to get in again, scaled into this position. Boom, had trailed my stop loss, ended up getting stopped out around here. Price came down. I remember you guys were on a call in the mentorship when I entered this position with you guys because I was in a little bit earlier here, and then price came down, and I ended up getting back in again here, and then boom, price flew up. Ended up getting out again right here. Price came down, created this higher low. Uh, I either got in right here or right here to flow with this. Boom, price came up, higher low. Flow with this here. Same thing, same thing, same thing. Flow with this move all the way up. And then this was the big trade for me. Because I did put I built up so much equity, and this is how I grow my accounts as well. I focus on the equity that's in my accounts, and I use that equity to make more profit. So I'm not a 1% risk type of a person. Like everybody, like if you guys know me, you know I don't risk 1%. That's not me. I don't risk 1%. I focus on what is my initial account balance, what did I bring my account to, and how much am I willing to risk of that capital. So let's say, for example, what's a good even number? So let's say, for example, the account started at for the week, um, the account started at, let's say, $1,000. If the account started at $1,000, and let's say I was risking $100 a trade, and let's say buy this trade right here, that happened that I took Thursday. Let's say throughout the week I was risking $100 and I ended up making, let's say, $1,000. So I'm at $2,000 in the account. So that means I'm up $1,000 in equity. I was risking $100 to get to that point. If I know I have $1,000 of equity in the account, it depends. It's not always the same number. It depends on whatever I'm willing to risk. Let me see something real quick. Uh, one second. I'm gonna add another position on GA real quick. But if I'm willing, whatever it is I'm willing to risk, depending on the setup, if it's a high probability setup, I have no problem. If I risk $500 and I lose it, I'm still up $500 dollars in equity in the account. Now I would not risk the entire $1,000 in one trade. That's ridiculous to me. But you guys can see how like I would build up the account because instead of risking like $100, I know I have $1,000 in equity. I'm willing to put $500 on this trade to potentially make, let's say, 1,000, 1,500, $2,000, from that. And that's how I build it. So if I lose, cool, I'll take the $500 hit. I'm still in profit. I can build that 500 back up to, let's say, 1,000 again, and then take another $500 risk. I'm not going to take two $500 risk in a row. So if I were to take that big leap, that big trade, and I were to lose that $500, then the next trade, I'm going to go back down to like $100, maybe like 150, just to go up a little bit since I have $500 of equity. But like go back to like 100 to $200 worth of risk to build it back up to that 1,000, and then boom, take that big leap risk again. So I'm always mitigating my risk. But I don't do that until I build equity. Because you guys heard what I said, like I don't do that until I actually build equity. I'm not gonna start off with the $1,000 account equity and immediately start risking $500. No, I gotta have equity in account. So I was using all of last week. Well, this trade right here, that's why I was able to risk more because this trade right here on gold that I took that Thursday and price shooting up, it started me off the next week with a lot of good equity in the account. So I was risking a little bit more, taking these bases, boom, 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 boom. And I didn't lose a single day on gold. Every day for me on gold was a green day. I was getting it's in my trade Zella. Actually, let me pull it up here real quick. Just so I can tell you guys, so you guys can see like what the numbers was, not profit wise, but the actual numbers itself was R multiple, because that's all I focus on with my journal. Let's see, right here, where's that? Da, 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 da. Let's go back here. So yeah. Let's see. Tuesday, I got a 2.5 R multiple. Wednesday, I got a 3.5 R multiple. Thursday, I got a 8.6 R multiple. And then Friday, I had a 12.31 R multiple. So that's how I got the 20 R multiple. Thursday and Friday were my two biggest days, which gave me the 20R multiple. And then, Tuesday and Wednesday added that up. So basically, it was like a 25R multiple for that. But I had all these R multiple, all the equity from that. So I'm like, yo, I'm about to put some risk on the table. I had a lot of equity to play with. So I put a big risk on the table, and that big risk played out, which is why I didn't hold this move. I could have continued to keep holding over the weekend potentially, and it would have made a lot more. But this big of this move right here with that risk that I had was more than enough for me. So I ended up closing here because this is my TP anyway. This was the TP here. I was looking to target up into these highs, and price got there. And it was a Friday. I was not about to be ungrateful for it. I showed gratitude for it, and I just ended up closing all the positions here. So looking to go this week, definitely got to wait on some type of retracement. Because price, even Sunday, I was not expecting this. If I would have like seen this, I definitely would have traded gold last night. But I was like, okay, it's about to be slow, not much movement, and then boom, gold pushes up. So right now it's nothing for me to look at on gold, which is why I have multiple pairs in my arsenal. I don't just trade one pair. If gold was looking clean last week. Gold was looking cleaner than indices. Me personally, indices is my favorite like asset to trade, but gold looked cleaner than SPX, so I was more so focused on gold. And then like tonight, GA, since the market wasn't open for the US, GA was cleaner, so I decided to trade GA last night. So that is that. That's that gold trade. That's like the strategy of it itself. Now for the questions, because I just broke down like the entirety of my strategy, how I trade on a day-to-day basis. As you guys can see, it's very, very simple. I do not like to overcomplicate it. I do the exact same things over and over again, and just flow with the market. It's nothing more to it. I don't add anything. That's really all it. So now I want to ask you guys, do you guys have any specific questions that you want to go over right now? Any questions at all? I still don't know why this YouTube thing is not sharing the screen. Allow tags. I don't know why. Customization? I have no idea. I have no idea why that's not showing. All right, whatever. So I got in again here on GA. Had this area here, scaled in again. So let's see if price does come down into these lows. And if price does, what I'll do is potentially take off one of my positions, one or two of the positions, probably take off one position fully, and then probably take partials off of the other position and look to constantly still flow with this. But this is a more of a s- I don't even like to call it swing trades. It's just a longer term setup. Because me, another thing about it as well, I don't classify myself as like a swing trader, intraday trader, or scalper. I'm a trader. Because if you look at my stats and my trades, the times very, very like recently, like I was actually shocked. Like I was looking at my trades, I was just looking at my statistics for the month of August, right? Guess how long of an average like hold time my trades were. Like you actually be shocked. Like I want you you guys because you guys know me, you guys know how to trade. I just want you guys to take a guess of what my average hold time on my trades was for the month of August. You guys would be like, nah, bro's capping. Let me see. Let me see. Where's it at? Where's the date range? 4 days. You are bugging. No, 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 no. Absolutely not. I don't remember the last time I held a trade for 4 days. I think I don't know that gold trade that I held. I don't know if that was 4 days. Nah, I ain't hold a trade for that long. Boy, I can. I would have no problem like this GA trade. I could hold this trade for 4 days. Because the reason why it's like I'm not holding one position. Well, I will hold one position for 4 days, but the reason why it's easy for me to do that, and this is the reason why I say I don't classify myself as like a scalper, day trader, intraday trader, because this could be a swing setup, right? Where this trade may take, let's say, 3, 4 days to play out. In no reality am I holding all my positions for 3, 4 days. Like, let's say, for example, the entry that because I always add multiple positions, and I'm gonna answer your question, Vontae, and I'm gonna answer the question of how long I hold it, how long my average hold time was. But because I have it pulled up here, and that the time actually dropped, based off of the trades that I took. It dropped double. I'll tell you guys what it was. Um, but I don't ever start a position like, let's say for example, I want to risk $1,000 on a position, right? Let's say for example, I will never come into the position like this first entry is not going to be a full $1,000 risk, which would be, let's say, obviously I know it's not a standard lot, but let's say it was a standard lot for that $1,000 risk. I would not come into the position with a full standard lot, to put all that margin into literally price just shoots up and I could get stopped out and lose the $1,000. What I do is I scale into the position. So I would do instead of doing a full standard lot, I would do like let's say a 2.5, or a 5 point 0.5 and a 0.25 and then keep on scaling into this position. So let's say for example right now, this position right here, let's say I was looking to start this position with a because this is actually like what I'm doing. I'm not gonna say the exact lot sizes, but let's say I was trying to scale into a total of a what's a good number to make it? Because I don't want to keep on saying point two, point two. Let's say a 10 lot, a total of a 10 lot on this position. What I did was instead of doing a 10 lot, what I'll do is I did a, excuse me, a 0.25, well, a little bit of a bigger one. So a point 0.5 and then a, not point 0.5 because that's not a 10 lot. So a 5 lot and a 2.5 lot. And that means I still have another more lot sizes to scale into. And as price creates lower highs and creates structure, what happens is my stop loss gets smaller. So I'm going to keep on using the same. I'm not going to keep on upping my lot size as price goes on because that's like it doesn't make sense because price can get all the way down here and I use another 5 lot and price comes up here and I give back all that profit. It doesn't make sense. So as my stop loss gets smaller and smaller and smaller, my risk is getting smaller essentially. So I even if I were to take a loss, let's say price creates a lower high here, it comes down, creates structure, and I move my stop loss right here. If price were to come up, I'm not losing that a full like 10 lot or $1,000 risk that I was essentially looking to risk. I'm only losing a little bit of that. And I can keep on stacking positions, lowering my lot size, lowering my, not my lot size, lowering my risk, but maximizing on the reward because I can keep on adding positions. Boom. Now let's say this creates a lower high. My stop loss is right here. Now this 5 lot and this what 2 lot that I had up here is no longer a risk on the table. So now the only risk that I have on the table would be like the standard lot that I have right here. So let's say the standard lot would be the only risk that I have on the table. So if price were to come up here and stop this out at a standard lot, I would only, let's say I was trying to risk $1,000 in total. This would only be like a $250 loss. And this is how I'm able to hold trades and flow with them a lot longer and not get so like worried or afraid and stuff because I'm not risking too much on the position. Now, did I start like this? Absolutely not. Everybody knows my story. I blew over 30 accounts in my years of trading to for it to click. And it wasn't technical analysis that clicked. It was literally all me. It was like it was my thought process because I always knew that there would be a point in time that I would because that's what I want. Like everybody's different. So your goals depends on you. I know I want to make 7 figures from trading, six plus figures from trading. I know that, but I was always trying to do that within a month. And I was trying to do that with super duper small accounts. And I was trying to flip those accounts super quick so I can get a big jump and then start making bigger jumps. And that's what was, blowing a lot of my accounts. Because for me, it wasn't ever the issue of growing an account because like I've grown so many accounts and like you guys even seen in mentorship how I grow accounts. But I've grown accounts. My issue was, let's say for example, I took a back then, because back then I was like trading like $100 accounts. But I would take a $100 account to like $700 in like a day or two. All it took, because I was like that risk, I was like, oh, I'm lit. I would risk $500 the next trade, lose it, and try to make that 500 back and keep on trying to like risk to make that back because I was like so attached to the profit. And I ended up blowing the entire account and having to start over. So that's how I used to blew so many accounts. Like 90% of my accounts was from over trading and over leveraging. It wasn't from like not knowing how to trade. It was from over trading and over leveraging. So now um the Bible says like, you gain wisdom from it in order to become wise, you must first become a fool. And I definitely had to become a fool in order to get to this. Now it's like I look at it from a different perspective. I look at it as, and this is what helped, and this is why I teach you guys all the time. I know I'm going to get to that point, and I treat my trades and my profit as if I'm already there. Because when you put this into a perspective of, let's say you want to be making six figures or something like that, and you know that this could be a six-figure trade. Let's say price were to come down here and it came down to this area right here. And at this point in time, this would be like, let's say a $40,000 position. In no reality would you be upset that you just closed out at $40,000. You know that, you'd be good. You can live your life, everything, all that type of stuff like that with $40,000. So what I started looking at it was treat these smaller accounts every single time that I enter the position or close the position. And I still do this to this day. I just keep on increasing the dollar amount, like in my mind as I grow, I increase the dollar amount. But all I look at it as whatever it is that I am risking, I'm like, yo, this same whatever risk is going to be X, Y, and Z later on. So if I close out a position, and this is I did this, I started doing this with like smaller accounts, right? I'll look at it like, let's say I closed out a position at $100 or $200. I will look at it as the same $100 is going to be $1,000. The same $1,000 is going to be 10,000. The same 10,000 is going to be 20,000, 50,000, 100,000, so forth and so forth. And with that mindset, I don't look at profit. Like when I'm in my trades now, I don't look at the profit. I just flow with the move. As long as I know my overall risk, I'm cool with that. So that is like the actual trade management part of it and how my mental is. But to answer that question, that I told you guys earlier, I'm looking at it now because I just pulled it up, but my average hold time for the month of August was 12 hours, bro. Now it is 6 hours and 55 minutes, probably because of the last like Thursday and Friday of me trading, because those are a lot like quicker trades. My average hold time was 12 hours. You guys know me. You guys know me. I don't like usually before my average hold time was um I think when I was just like super duper scalping indices, I think my average hold time was like less than an hour. I think it was like 20 minutes. Now it's 12 hours. So, well, now it's 6 hours, but yeah, that's pretty much that. Let's see. Let me answer this question. Okay, cool. All right, let's start answering some questions now. All right, so drop all the questions that you guys have for everything that you want me to go over with this masterclass. It could be the strategy, it could be risk management, it could be technical analysis. Literally, no question is a dumb question. Let's see. With the way UJ trading right now, how would you go about getting into a trade? I know the US market's not open right now, but it been in a range. Would you wait for it to break that range before trading? Let's look at it. Let's look at it, bro. Let's go to UJ. Uh, and let's go right here. All right, cool. So first things first, like I told you before, one thing, Vontae, if you are ever looking at a chart and it looks cluttered to you, keep bumping it up more higher, higher, higher time frames until you can see structure wise. So if we were to like, let's say we started off on a 1 hour time frame, this looks like super duper crazy. We don't know what the trend is. Like this is ridiculous. Um, What's a good? I have trouble identifying the trend. What's a good way to learn? I got you. I got you. I got you. We'll definitely go over that as well. So boom, let's say the 4 hour time frame. It's like, I don't know if it's bullish, bearish. Boom, let's jump it up to the daily time frame. Still maybe looking kind of weird, kind of crazy. Let's jump it up to the weekly time frame. So boom, we look at this and we scale out. Okay, let's look at it from a weekly perspective, right? We can see, okay, prices from a weekly time frame has been in a range, but we can see something that could potentially be something longer term, especially when you factor in what's going on with the US. Because if it's USD JPY, that means if it's going up, the US is essentially stronger. And if it's not, and this is like I told you, Avante, this correlates into why it's like you got to ask yourself why, because there's a reason behind everything. The market doesn't just do. things just to do it. You got to ask yourself, why has UJ been trading in this range for so long? Why is the market not trending clear? And that is because there's not clear direction in the economy for price to do that. And the reason why I say that is you look at almost every single one of these pairs with the US in it, they're all consolidating. Why are they consolidating? Because they're waiting on that big, because if you like look at news a little bit, you don't gotta like go crazy into it. But when you look at news, all these small events that are happening are building up to the big event. So it's like when you got NFP, CPI, all this type of stuff, all of this builds up the confluence of what they're going to do in the middle of the month for their if they're going to cut interest rates, not if they're most likely are going to cut interest rates anyway. But all of that builds up to that. So when people are speculating and there's no clear-cut direction, prices shoot up, shoot down, shoot up, shoot down, shoot up, shoot down, shoot up, shoot down. It'll be one news event for like CPI and it's positive, boom, it'll shoot up. The next event will be negative, shoot right back down. Or that the news event will be positive, but it's not a major thing, major confluence in the market. So it'll push up, but it's not enough to like give clear direction. So it'll push right back down. Exactly what it did here. I'm quite sure it was something positive that happened during this week of the market and it popped up and what happened? It came right back down into this range. Prices literally been ranging and ranging and ranging. So that's something to always keep in mind. It's like if the market is ranging for a long time, that is because it is waiting on something big. And if it's waiting on something big, once, and this goes into the factor of what your question was like, would you wait for it to break that range before trading? This goes into the factor of you can trade it, and I'll show you how to trade it. But this goes into the factor of looking at it from a longer term because whichever way price breaks out and trades is going to go in that direction for an extended period of time. If UJ has been in a range since essentially July, well, it's basically been like what, 2 months, almost 2 months. Um, I mean, it was in the range here as well, but let's say it's been in a range for months because usually, like you see ranges on the lower time frame for like minutes or hours. But if price is in a range for months and price breaks out in either direction, it is going to go in that direction for a long period of time. So if UJ breaks out of this range to the downside, the main TP, and it can even start breaking below this area because of how big that range is, would be 142 flat, right? So if I know that. I would rather take base hits for looking for the positions on here. You can trade. I'm gonna show you how to trade this. But I would rather take these base hits. I'm not gonna be looking for big positions here. I'm gonna be looking for small base hits here. And once this breaks out, let's say it does go down to the downside, that's when I really start looking to flow because you're gonna see clear structure, lower lows and lower highs, or you're just gonna have big drops, big drops. So when you know that, once that time does happen, you're patient and you may either sit on the sidelines or take your base hits, but and you don't try to the biggest thing about a range, don't ever assume that price is going to break a range. When you're trading in a range, always get out at that next area of support and resistance. Always. Because what could happen is price could pump up just exactly right here. And you could assume that price is going to break above and keep going. You done got all this profit, and what happens? Boom, comes all the way back down and takes away all that profit. And now you would essentially, let's say you entered here, you'd essentially been in drawdown or basically break even this entire time. So if you're trading in the range, trade from level to level to level to level. From trade from the resistance to the support, support to the resistance. You can trade both ways if you want to, or you can only take trades at one specific level. So that is a key when it comes to trading in range. Always, always, always don't ever assume because you can always wait for a break and retest. If price breaks out of that range, even if it just keeps shooting up, just like how gold does. Because I know gold, a lot of time, if gold is in a consolidation and it breaks out of range, more times than not, it doesn't come back down to that range. You just got to catch it later on. If you don't catch that big push up, let's say you weren't in the trade beforehand, and you don't catch that big push up, just wait. You just got to wait a couple of days or a couple of hours or whatever the case may be. So that is something to keep in mind, Vante. So that's how I would go about looking at it from a bigger perspective. Now, when it comes to actually looking to actually trade this, um, when it comes to trading in a range, I only focus on the resistance and the support. I'm not looking to take those like little minor in between trades, like on those little areas. Price has to either be at that area of resistance or be at that area of support. So if we're looking at the area of support, this would be the area of support right here. We can drag it right here. Actually, let's make it a little bit cleaner. Let's just draw a box, right? Let's do a box here. This would be the support. And if we're looking at the resistance, we can do here. This looks a little bit cleaner right here. Let's just do something like this. I can adjust it a little bit on the lower time frame, but you get the gist. This is like the range of it. So if that is the case, this is how we'll go about trading this. I should be able to adjust this a little bit more on the 4 hour time frame here. Boom, boom, boom. So this is how I would trade this. If I was looking to take trades on UJ before, I would have entered down here. Like even like right now, if I was looking to take this trade, the setup that happened right here, now it's a little bit too late. Because price is too close to this area. Price could, come back down, break below, all this type of stuff. And this is the beautiful part. You guys know this when it comes to support resistance. I love teaching this. When you look at trades, this is when it comes to higher probability setups over just any setups. When you have a key area like this, what if I were to tell all of you guys right now, you had a 90% chance of winning if you were to take a trade right here? This is ugly, but this is 90. This is a 90. You had a 90% chance of winning if you took a trade right here. And if you took a trade right here in this middle, you had a 50% chance. This is a 5. That looks like an S, but this is a 5. You had a 50% chance of winning. Where are you going to look to take your positions? At the 50% range or the 90% range? I mean, most people say the 90% range, right? So these are the main areas that I'm looking to take those trades at. Because if you're wrong, even if price wicks down below, I would always have like my stop loss like a decent enough room just in case price does like wick. I wouldn't have like super, especially that no consolidation range. I wouldn't have a super duper tight stop loss here. I would have the stop loss essentially like below here and looking to target back up to here. But if I were looking to take this trade that already happened, what I would have looked and went down to this lower time frame just to wait on that confirmation. We see prices trading at an area of support. Now, what do we have here? You could have had this bullish engulfing that you could have entered on. You could have had this that you could have entered on right here. If you want to get a little bit more in depth, there's actually still a potential way to get into this trade as well too, because you can see prices shifting structure. But you had this double bottom here, boom, entry could have been here. Let's say you were scaling into the position, you could have got one here. Now, at this point in time where price is currently trading at, if I were looking to take a trade on UJ, I know that my main TP is going to be up here at 148,500. Minor TPs would be like all throughout these minor TPs, but the main TP is going to be up here. So if I didn't catch this move and I know the main TP is up here, it's essentially the same exact thing I'm doing with GA. Because GA is in a range. But I'm doing the same exact thing with GA. I'm just doing it the flip side. I'm doing it for sales. So if I missed out on this trade here and I'm like, okay, I know the main TP is here, all I'm simply gonna do is just wait for a higher low. Like I can't enter right here because once again, price is too close to a resistance and there's no candlestick entry. It is bullish. Price is trading bullish. I only got one confluence out of the other two of a candlestick and the market structure. I mean, candlestick and a support resistance. So all I would simply do is wait for price to essentially break above this area. Boom. Give me some form of a higher low. And if that is the case, depending on where that higher low is formed, I can enter here and I could do it either one of two ways. Have a little bit of a bigger stop loss below here for more breathing room for price to like, let's say come down, fluctuate some more, and then continue to fly up. Or if you wanted to do the aggressive stop loss, your stop loss would go below like this area. Basically, well, I mean, realistically, your stop loss would still have to go like below here to give it some more area, but it's a couple of pip difference. Like well, I mean, that's actually a 30, 40 pip difference. So that's how I would enter this trade on UJ if I was looking to get into it now. So I still would trade it. Like you can make profit like very, very well. Look at this. You could have take buys here, and let's say you took profit out here, you could have got back in again here, boom. You could have taken buys here, up into here. You could have taken buys here, here. You can see every single time, not every single time, but majority of the time. Not obviously the market's not going to do it every single time. But if we look at it from percentage wise, 90% of the time, every time price got into either one of these areas, it had a reaction to the upside. All of this that you're seeing right now, it may look like, oh, price is trading bearish. It's not. Because if I go to the daily time frame, that's a wick that's forming. Right here. Look at this. You can see? If I go to the daily time frame, you think, oh, price is trading bearish. No, it's just a wick. Like price just came down here, overlapped this area, and broke back above. So as you can see, 90% of the time when price, if I know that there's that 90, there, you see what I'm talking about with the 90, 90, 90, 50? 90% of the time. Now there's this one time where price did break above and it didn't reject and hold. But other than that, even here it broke above a little bit, but once again, it was still a wick. It's still this overall zone. It came back down. Even right here a little bit, but majority of the times, price came here and came down there. So that's how I would trade this position, Vontae. Hopefully that makes sense. I have trouble identifying the trend. What's a good way to learn? Yeah, so Stefan, uh I'll tell you exactly what I did, and this is what helped me learn like market structure in its depth. Everybody does things differently. I don't know what stage are you in your trading. I'm glad that it makes sense, bro. What stage are you in your trading, bro? Let me see. While you're typing that out, what I did was, since I know the foundation of my trading is only three things: support, resistance, market structure, and candlesticks. I went through each of them one by one. Some people they can trade all of them at the same time, which is absolutely beautiful. Like you can not trade all of them, but you can learn them all at the same time, which is absolutely beautiful. You're phenomenal. But for me, what I did was I only focused on market structure. So, for example, let's go to. Uh, we can do it on UJ since I'm right here on UJ. So what I did was I didn't focus on candlestick. Well, I already knew candlesticks. Candlesticks was easy, but I didn't focus on candlesticks. I didn't focus on support resistance. All I simply did was come to. I would have like a bunch of pairs on my right. I've been blowing challenge accounts consistently. I understand the concepts, but I can't combine them properly. Okay, cool, perfect. I got you. So what is your like foundation of your trading? What type of trader? Like, how do you want to trade? Because it's tricky to like teach my like full strategy. Like, well, not tricky to teach the full thing, but to go like super duper in depth on just like one YouTube call. Like obviously that's a part of the mentorship, all of that. The course section is in there. But when it comes to you building your own strategy, what is like your foundation of your trading? Then I can kind of help you a little bit, steer you in the right direction. Because I want to do give you advice that will help you the best with your studying because I don't know how you trade. I don't know if you use trade price action, if you trade order flow, like uh give me a little bit like of what you do. And I'll tell you like honestly what I did. But for me to understand market structure, I would literally have like let's say like I'm being serious, like 15 to 20 pairs. Like I would literally. And this is how I learned. And this could apply to everything. I try to be a swing trader, but I'm more intraday. I don't mind a few hours. I like price action and candlesticks. All right, put perfect. So basically the same way that I trade, right? So this is what I did. This is the gem. This is the gem of how I built my strategy. This is the gem. I'm telling you, this literally changed my life and you see how God plays out because now I actually do what I've been. It's so funny. I say this. I thank God for this all the time. I actually do what like. I do this so natural now because this is what I've been literally putting the reps to do. I never knew that I'd be in a position of a mentor, like teaching people have my own business and like all this type of stuff, like what I'm doing now. Never thought I was gonna do this. I thought I was just gonna be my own trader and boom, go crazy, right? This is what I used to do. I used to, since I knew the foundation of my trading was market structure, support resistance, candlestick. So let's say, I'm gonna just say MS for market. Nah, I'm about to, I'll type it up. So I knew it was market structure, right? Market structure, I'm gonna say key areas. And then three was candlesticks, right? Candlesticks. What I did was I would go one by one and I would take my time on just one. So what I did was, let's say, for example, with key areas, I'm gonna do market structure for you as well, but for key areas, this is what I did. I didn't focus on any of the other two. I would boom. I'm only coming to my charts and I'm only marking up support resistance. So I'm boom. I'm clearing off the charts. I'm all right. Let's see if we can find. We got support here. We got another resistance here. Boom. We got a little area right here. Boom. Let me go down to the 1 hour time frame. I'm not gonna do it, but let me go down to the 1 hour time frame. Let me look at these internal structures. And then guess what I would do? Clear off the charts. Come back over some more. Boom. Let me see. Okay, let's have this area right here. Let's see. We got this area right here. Let me see. Boom. We got an area up here. Boom. Clear off the charts. Keep going back. And I would literally yes, yes, yes. You are absolutely getting this recording on WAP, bro. You're absolutely getting this recording on WAP. I'm recording it now. But I would literally keep going back and back and back and back, and then I would stop, go to another pair, and keep on doing that until I got to the point. And this is what I used to do. This is how I tested myself to see if I was ready, because I had to actually prove to myself. And it's like I cannot prove, because like a lot of people, oh, you got to prove to somebody. No, you don't prove it to yourself. And this is how I proved to myself if I was ready to go to the next level. I would literally. It's like it actually works. It may sound crazy, but I would literally like say, "Yo," I would put myself in a scenario. It was literally just me. It wasn't like no mentorship or nothing. It was literally just me and my computer. I would say, "Yo, Seer, like if you had an audience of 100 people, matter of fact, 10,000 people, I will always use a big number, 10,000 people watching you right now, and somebody say, "Yo, Seer, can you go to silver? Can you go to silver right now?" And have a blessed one, Bobby. Have a blessed one. If you go to silver right now, and can you, mark up your key areas on silver? And every single time, if I would go and I would just keep on doing this, I had to keep going. Like I would have to be able to do like 10 different pairs in a row for me to want to go to the next level. I was like really dialed in with it. If I came to silver and I'm like, let me see. Uh, this would it be here? Here, if I came to when I was doing this and I'm like hesitating, I'm not ready. And I would keep on going back and I would keep on studying it, studying it, studying it. And then boom, I was like, yo, Sid, like go to silver and mark it up. Then it was like boom, I was getting to the point where I was like, all right, boom, we got area support here. Boom, you got resistance, little minor area resistance here. Boom, you got an area resistance right here. If you look left, boom, you got a resistance right here. Boom, you got a resistance right here. Boom, you got a resistance right there. And I would keep on doing that. I'm like, all right, cool, you got that. All right, bet, go to Bitcoin. I was literally doing every single pair in my mind. I was not just doing Forex pairs. I was doing indices. I was doing cryptos. I was doing stocks. I'm like, all right, go to gold and do the same. Not go to Bitcoin, do the same thing. And I'm like, all right, cool, bet. Boom, here. Boom here. Let me see. Boom, you got an area of resistance here. Boom, and if I look left, let's see, we got an area of resistance here. Boom, we got this right here. Boom, and then you got this resistance here. If I were to go down to the 1 hour time frame, obviously I'll be able to do the same thing as well. There, let me, because I look a little cluttered, but take that off right there. Boom. And I would do that for literally like 10 pairs in a row. And then once I was actually flowing with them, like, all right, cool, I got it. Now let me go to the next one. And then once I was able to do that, then I went to the next one, which was market structure. Market structure took me the longer one. Candlesticks was easy because I learned candlesticks in like 2 days, like when I first started trading like 4 years ago. So learning the candlesticks, I didn't have to relearn candlesticks. I just had to see what area those candlesticks were at. So that literally wasn't nothing. I just came to putting everything together. But when it came to market structure, I would do the exact same thing. I would look at it and see, okay, what is, because this is my strategy and how I trade. I like to see the overall trend and see the lower time frame trends and being able to flow with those lower time frame trends and understanding certain key areas. So since we're on Bitcoin right now, I'm like, okay, this current trend right now on Bitcoin is bearish. I do know that the overall trend is bullish. And I would like identify, okay, where are your major structure points? First things first, I don't know how good you are with structure, but when it comes to market structure, this is how I look at it. High, higher low. This higher low that formed right here is not valid yet until it breaks above this high. Once it breaks above this high, now this is the valid higher low. So if price were to come down here and do something like this and break this, this is not a break of structure. This is a retracement. Price can do this, boom, here, here. This is still not a break of structure because price never broke below here because you can see it happen so many times, and I can show so many different examples. where you would think price is about to be a retracement, not a retracement, a reversal, and then boom, all of a sudden it starts breaking back above and continuing the overall trend. That is market structure. If price were doing something like this and we had here, higher high, higher low, boom, here. And then you started to see this. Remember, this is not a breaker structure yet, but boom, here, now that price broke here, now it's a breaker structure. Now I can look to start flowing longer term for sales. Because more times than not, price doesn't just break structure and then just break back structure. Like more times than not, you're not gonna see it can happen, it does happen. Um, Rarely, but it doesn't always happen. You're not going to see something like this happen, where price does this, here, it breaks structure, and then breaks all the way back up here, and then that doesn't happen more times than not, unless it's like some crazy news event that happens. But more times than not, it doesn't do that. So that's the first thing that I would do is identify. Okay, let's just look at the daily time frame and do the exact same thing. This is the high. Price created this higher high right here. Price came up to create this higher high up here. It created this higher low. This higher low right here was not valid yet because price could have easily did this and came all the way back down here. And this still could have been bullish because this was the, higher low that formed right here. Because if we looked at this from a bigger perspective, price created this high up here, created this higher low down here, and then it finally broke above here, which now validated this higher low down here. So now that we see that, and let me take that back off. Once price broke above here, now this, since it broke above here, now this at this point in time was this valid higher low. What happened? Price came up here, created a higher low here. Price broke above, it overlapped this area. You can look at it from that aspect because if you go to the weekly time frame, you can see that this is literally just consolidation. So this isn't a valid break because price didn't break and continue to go bullish. As you can see, it literally here. So beautiful example of market structure and how it is overall and how I'm able to understand key points. So if we look at this, let me ask you guys this. You guys tell me this. Which one is the valid higher low? Is it this right here? Is it this one right here? Is this the valid higher low right here? Or is this the valid higher low down here? Which one? Is it, let's call this one A. A up here or B? Which one is the valid higher low? B. Okay. Correct, correct. Yes, yes. Yes, so it's B. So this one is the valid higher low. So if we know this, when we go down to the lower time frames, even though Bitcoin is trading bearish right now, we can still capitalize off of the sells and take sells. But we got to understand that at any point in time, remember I told you guys at the beginning, bullish structure is always, and bullish candlesticks hold way more weight than bearish does in an uptrend. So we know that this is the main higher low point that has to be broken before we can talk about like Bitcoin coming back down to like 80,000. So when I know that, what I simply do, and this is how you are able to like understand market structure a little bit better. So I can simply just mark this off down here just so I like know, right? So we can mark this off down here, and then if we go down to like a lower time frame, like a daily time frame, we can see that okay, this is the higher low here. Let's make it a little bit smaller. So what's going on now is a retracement. We can still flow with the cells, but we know we have to identify that this is a retracement. So we got to identify where these key lower high and lower low points in this current retracement because once this retracement is broken, then it's going to be the boom, the move push back up to potentially up into the 125,000, let's call it, back up into the 125,000. So we're going to look here and we're going to do the exact same thing on this lower time frame. We're going to look and see where are our key lower high points and lower low points. We got here. Let me see here. We got this lower high that was formed right here. Lower high, price came down to here to create a lower low, and price created right here. And see, remember I told you guys about like the internal type of a stuff. What happened? One second. My computer flashed on and off. You guys can still see my trading view, right? Making sure because my monitor is turned off and on. Yes, perfect. So we know that this is remember this internal structure that I told you right here was like, oh, boom, high, higher high, boom. Oh, this is a breaking structure. No, because this is still the valid lower high because price created this lower high. And what did it do when it came to this low? It broke below this low. So we know that at this point in time, this is the valid lower high. This is the low. When price came up to create this lower high, remember none of these, and this is why price kept on retracing up. None of these lower highs that were formed, even this one right here at this point in time, was valid until it broke below here. So now that we know that, this lower high that formed right here came down and broke below here. So now this is the valid lower high. So when it comes to us constantly flowing with these cells, we know that until price breaks above here, or unless it creates another lower high and continues to keep going bearish, but at this point in time, until price breaks above here, we can constantly look to keep flowing with the bearish momentum and constantly keep looking to take sells. Even right here, you see how remember, this is like essentially like lower high, but price never validated and broke below here. And price, if it wants to, if we go down to a lower time frame where you can see it a little bit more structured, a little bit more cleaner, you can see this right here. You may think, oh, this is a break of structure and price is going to fly all the way up. Price can come up, maybe come up to here, like even up to here. As long as it doesn't break above here, price can come anywhere it wants to within this entirety of this whole range. Price can come anywhere it wants to in here, and then either break up, I'm not break up, and come down and continue to go bearish there. So all we simply got to do is just wait for that lower high to form to constantly keep flowing with the sells. So that is market structure like more in depth, and hopefully that does help you. Um, who asked that? Stephen. I hope I'm saying that right. Hopefully that did help you when it comes to like practicing and understanding it. And this is like what I would do. Like you see, I'm not even trading Bitcoin, and I was able to do this for this one pair, and this is what I would do. I would do it on this pair, and then I would go to another pair like say like XRP since I have this up. I would go to XRP and I would do the exact same thing with this pair as well. Obviously, the one I will always start off with the actual main pairs that I was trading. Back then, when I was really doing this, I was trading a lot of gold. I was trading, I think GA back then, and like that was before I really started. Like when I actually really did this and like really went in depth. I think that was before I really started like going heavy, heavy, heavy on indices. But it was mainly gold. I remember because gold was always like I've been trading gold since I started trading. So gold has always been in my arsenal. And I would do the exact same things as well. Like even if we were looking at XRP, we could see price came down, created this higher low just based off a daily time frame. It broke above. So now realistically, yes, it's still a big pump up. Even if that's the case, we still got to identify that this is still the valid lower high down here because price had this higher high. I mean, it's not lower high, this higher low. Price had this high, higher low, higher high because now this higher low is validated. Even with this, price created a higher low, but it never broke above here. So what did happen? It came up here, came back down below. So realistically, price has all of this room to keep on trading bearish and fluctuate if it wants to before continuing the overall uptrend. Because if the US dollar is weak, cryptos are going to keep on going up. Bitcoin is going to keep on going higher. XRP, I can see XRP getting to like where was it? Because I had a Fibonacci um as well. I had a Fibonacci here. Boom. Like I can see XRP getting up to like 4.20. And this is where I'm gonna be looking to like transfer a lot of my profits that I make and just put them in cryptos and just let them sit there until they just flow and just make more percentages. But that's like a different topic for a different day. But yeah, that is market structure, and that's how I would study it. And I would do the exact same scenario. Once I felt like I got it, I would say, all right, sir, go to USD CAD and do that. And if I was confused at it, if I was like misunderstanding it, then I would have to go back and just keep on studying it until I got it, and then I would go back to it. It's like boom, it clicks. All right, go to this next pair. I would always the reason why I kept on doing a bunch of pairs because there's different conditions in the market. Like I want to be able to see it's easy. I like to make it harder. Like I like to make it harder because it's easy to see higher highs, higher lows in a bullish trend or a downtrend. That's very easy to see, but the market is not always like that. And if you want to be able to trade at all seasons and all seasons of the market, all seasons of you got to put yourself in those positions of all seasons. You got to put yourself in those ranging conditions because even in those ranging conditions, there's still structure. Just keep going up bigger time frames, just like we did with Bitcoin. Just keep on going up bigger time frames. You could see where the overall structure is for that particular pair. So that is market structure. That's what I did. And I did this. The candlesticks parts was easy. Because if you already know what candlesticks are, all I simply did was just combine the other two. I would draw my market, not my market structure. I would identify my key higher highs and higher low points. Then I would draw my areas of support resistance. And then I would go down and only look at bullish candlesticks or bearish candlesticks, depending on the trend, at that area. And I would see how the trade plays out. So, for example, let's see. Uh, we can do it here. So I know the overall trend is bullish, so we identified that. Let's do a specific area though. Let's just do this zone. Let's just do this area that's going bearish right here. So if I was looking at this, I'm like, okay, boom, low. I know the overall trend is bullish, but this current trend right here is bearish. So what I'm gonna do is let me look left. And I would just put everything together here. I'm like, okay, let me mark off my support resistance. Let me look left. Boom, there's an area right here. And then when price dropped, where's the next key area of support that it found, which was basically right here. If I look at it from that aspect, and then I'll do one down here. So I would do that, and then I would scale down to like my lower time frame, such as like the 1 hour time frame, and I'll do the exact same thing. Nowadays, you guys saw my charts earlier. I barely have anything on my charts now, but this is how it would look if I were actually putting the strategy together. I'm going down to the 1 hour time frames, looking at my internal areas, and I'm going to mark one off. Since it's like ranging and doing a lot, I'm not gonna have too many lines. I'll do one right here, and I'm actually just gonna change the color of it, just so you guys can know that's a 1 hour time frame. Uh, let's see. Let's just change it to red. Right. So here, and then I would do, actually, since I'm only focused on this area, let's just go more in depth on this area. So I would do one right here, and then I would do one more right here, right here. So we can just do, make it a little bit cleaner. Boom, boom. So let's say we were focused on this right here. So I know the trend is bearish. And right here, I know the structure right here is bearish. Now I have my key areas marked off. Now, when it came to me with the candlesticks, it was very easy. All I'm looking is at what is when price is at these key areas. Dude, I got a candlestick entry. And my entries are like usually on the 30-minute and below, depending on the pair. Indices, a lot of the times I'm entering in like 5 minutes, 15 minutes, even 1 minute at a time. But if I were to look at this aspect of things, price came up into this area here. Remember, touch gap overlap. It's the overall zone. So this right here is essentially the gap of this resistance range. Price came up here, doji. This is a form of an evening star here. So I would essentially see this evening star, bearish candlestick, and a downtrend at an area of resistance, sell. Literally as simple as that. And I'll put my stop loss above the resistance range. Here, I'm not having my stop loss way above there, but I have my stop loss above the resistance range. And what I'll look to do is target the next 4 hour zone. So I'm going from one 4 hour zone to the next 4 hour zone. And I'm taking internal trades. I'm trading like from this level to this level, from this level to that level throughout the entirety of it. But I'm looking to target that next 4 hour zone. And as we can see, as some time plays out, it, got there. So when it came to like if I were managing this trade, this is how I would do it. Once again, I don't start off with all the positions. I would have multiple positions. So price would come down, boom, boom. Let's say here with the trade management, if price were to continue to keep going bearish, then I'll keep on holding. Let's say price got here, boom, started rejecting. Let's say I had two positions, right? Let's say I had two positions. I had two positions. I would take one position off the table here. And since it's like it's basically close to here, I would take one position off and I would close like partials of the other position. And then I would move that position above this next resistance range. Because obviously there should be no reason why I end up losing money. But I'll lo move it above this resistance range. Boom. Would have got stopped out here. Since I know the overall trend is bearish. Here we go. Another evening star here, so I would have got back in again right here. Essentially the same stop loss. Did the exact same thing here, still looking to target down into this area right here. Boom. Here. Boom. Price came down, consolidated for a little bit. Boom. Created a lower high. I could have scaled in again here. Had another entry here. Stops basically in the same spot. Price came down, lower high. Boom. Broke lower. Now I can move my stop loss above here. Boom. Boom. TP hit. So that's how I would put the actual strategy together. For me actually studying it, I would look at it as if I was actually taking a trade. I'm not a um demo account type of a trader. I even when I first started, the only reason why I used demo accounts was to see what was possible. I think I had like I think the biggest back then that I could have used back then was like a $300, not $300, $300,000 demo account. And I'll never forget, I did it on gold. I would literally just do a point zero 0.01 lot size, all cells. I think it was cells or buys, I don't remember. But it was a point zero 0.01 lot size, a point zero 0.1 lot size, a standard lot, a 10 lot, and like a 100 lot. And all I simply did was just look at the profits to see what was possible. And seeing the big gap from a point zero 0.01 to a 100 lot, seeing immediately 5,000, 10,000, like that type of fluctuation in price. I just did that to show like, yo, this is possible. Like this is the level that you want to get to. So I know that to get to this point, I got to get to here because I also looked at the risk that would have been on the table if I had the same. I actually looked at actual real positions that I would have taken, and I had a to see what the risk. I'm like, oh, okay. So in order for me to make this type of profit, I would need to be, using this type of risk. What type of account size that I would need to be able to have that type of risk on the table. So that's what I did with the demo accounts. I was only on demo account for like I want to say a week, and then I went straight to live accounts and started trading from there. But when I was doing my studying and back testing, like to actually build my strategy, I stopped trading and I literally just did this. And I would be real with myself of like, where exactly would I have entered? And I would have did it like this, and that's how I built my strategy, the way that it is today. So hopefully that helps you guys. That was a lot. That's actually good. It's actually a very, very dope call so far. Let me see. Yeah, I don't know. I'm gonna have to do that YouTube thing differently next time. Yeah, I'll have to do that YouTube thing differently next time. But neither here nor there. Do you guys have any other questions for me when it comes to trading, market structure, candlesticks, entries, growing accounts, um, literally any questions? Managing trades, flowing with the markets, technical, psychological, spiritual, any other questions that you guys have for me? Like this, like the first portion was me teaching my strategy. Now this portion is literally just all the questions that you guys have for me, and I just answer them all as much as I possibly can. The level to level really spoke to me. Thanks a bunch. Yeah, for sure. No problem. No problem. Grateful that I did have that. I definitely want to start doing more master classes with you guys and the mentorship as well in the group. Do you guys like this? Like the ones that are part of the mentorship, you guys like this? Because I definitely want to start doing more of these with you guys. And then like sometimes like have like a super duper specific type of a like category specific type of a lesson that we go over when it comes to it. So let me know. Let me know. Do you guys have any other questions? Let's see where GA is at right now. GA is still. I got you, Vontae. So yeah, because I know like as you guys level up, um, you're gonna have more questions as you level up because you may not have a specific question now, but once you get to that level, then it's like you may have that question as well. So looking at GA, this is the reality of it. Like since I'm like this is a live trade and this is literally exactly what I'm doing now is the exact same thing that I did with gold. Like this is my thought process. This 4 hour candle has to close before I get any confirmation of where price could potentially go for the rest of the day or the next, day or so. So for me, it's irrelevant, however you say it, irrelevant for me to go down to a 5 minute, 15 minute, 30 minute, 1 hour, even like it's irrelevant for me to go down to those lower time frames. Because I'm not entering no more positions because I didn't get another lower high. I'm already in 3 positions For me to really want to start stacking and scaling in, I want to see price break below here, like low, lower high, and then continue to go flow. I'm not about to keep on stacking a bunch of positions when price could pump back up some more. So I would rather wait. I gotta see. It's 2 hours left. Literally in the next 2 hours, this candle could close all the way up here. I mean, not close, but this candle could come up here and still end up closing down here. In the next 2 hours, this candle could come all the way down here. That is a very, very, very great question. That is a very great question. I love that question. Christian. Christian asks, if you have multiple positions open before major news drop, do you close all positions or do you continue to hold them when news drops? That is a very, very great question. It depends. It really depends on where I'm at in the trade, if that makes sense. Like it depends on if I'm at the beginning of it, middle of it, and so this gold position that I was in, I don't want to, I don't want to say I knew because you never know what's going to happen in the market. But I knew Jerome Powell was speaking on Friday. It's kind of tricky to put it because when you have like when God reveals certain things to you and you understand, like I already know what's going on with the economy. Like I already know it's weak. I already know Jerome Powell is going to say something negative. So I'm not going to say I knew gold was going to shoot up, but I was already in these positions. And for me, I had a valid stop loss when I was in this position for gold. Um, right when did I enter? Like 7:30 in the morning. Whenever I entered that trade at 7:30 in the morning, I had a stop loss way below here. So I had more than enough breathing room. If price were to come all the way down there, I was okay with that, with it. Now if I'm in a trade, I don't take trades right before the news comes out. Now if it was a scenario of if I'm at the beginning of the move, I'm gonna just hold it because I already accept my risk. And then more times than not, if I'm at the beginning of a move, remember I don't always fully scale into my position. So if I had multiple positions at the beginning of the move, that means I'm not fully scaled in. So if price were to like, let's say something happened news-wise, spread or whatever the case may be, even if I were to take a little bit bigger of a loss from spread or whatever the case may be, it still wouldn't have been my full risk because I didn't fully scale into the position yet, which was the case with this gold position. I didn't fully even scale into the position all the way because in that video, like if you guys saw it, what I wanted to see with gold was actual structure. I wanted to see gold create a high, higher low, because then I would have been able to scale in. I didn't get that. So I didn't even get to fully scale in. Price just shot up, which is still beautiful. But let's say, for example, if the news events happened right here. Let's say the news event happened at 10:30 and I was already in profit. Now, if I was like the entries was down here and I was already here and it was like 10:25 and the news event was about to happen, yes, of course, I'm going to secure some positions and let the other ones run. I'm not going to close the position fully because price can continue to keep pumping up and I still want to be a part of that. And I'm not going to not close anything because what can happen is like you could be up here and then price creates a huge wick all the way down. And let's say it does end up, I've seen this happen so many times, right? Let's say you are price is going bullish and you assume, let's look at this right here. Let me even, nah, we could just do it like this. So let's say this was right here. Let's say this was the news event and you're in this position right here and you don't secure anything. I've seen this happen so many times. You've probably seen it as well, Kristen, where that news event would happen and the immediate reaction is price comes all the way down here. And let's say your stop loss is right here. It comes all the way down here and then it starts coming back up and then trading bullish. You're obviously not going to hold this trade all the way because you're like killing your account with this. So that can easily happen where price could come all the way down, stop you out, and then shoot back in the over direction. So if I'm in multiple positions, I usually take majority of the position off the table, especially if price had made a big move. So let's say I was risking, let's use a number to give you a little bit of a perspective. Let's say I was risking, let's say $1,000. If I was risking $1,000 and at that point in time, like not even $1,000. Let's say I was not risking $1,000, but let's say I was up $1,000 at this point in time. Let's say I was up $1,000 at this point in time. What I would do is instead of closing the full $1,000, I would even close more than half, probably like $750 of it and let the other 250 run. and let that position do whatever it wants to do, and then move my stop loss to break even. So if price were to come all the way down here, I at least secured 750,000, 750,000, $750. So that's how I trade with news when it comes to it. Now, if it's like if I'm not in any positions and it's like 8:25 and news comes out at 8:30, I don't take trades before news. I always wait, depending whether that it's that 30-minute candle forming until the actual hour closes, or like maybe 15 minutes, 5, 10, 15 minutes after the news events happen. So that's how I do it in all three positions. If I'm at the beginning of a move, I still hold it. If I'm at the now, if I was at the beginning of the move back then, I wouldn't be able to like do it that way because I used to have like super duper tight stop losses. So that wouldn't work holding it at the beginning if you have super duper tight stop losses. For me with gold, if I would have had like a super tight stop loss like right here, even though price shot up, the spread could have came all the way down here and still stopped me out. But since I had a good stop loss below here, I'm okay with that like fluctuation. So if I'm at the beginning, I hold it. If I'm in the middle, I close most of it. Now, if I'm not in a position and before news comes out, I don't enter a trade. So those are the three scenarios that you'll see in the market that happen. Hopefully that helps you out, Kristen. So, yeah, you guys got any more questions for me? This was actually, I love, like, this is actually dope. Like, this is actually very dope. I love doing this, because it helps you guys out a lot. Like, I'm definitely gonna do more of these with you guys in the mentorship as well. I may even start doing like this, like maybe once a week or something like that with once or twice, maybe not twice, but like once or twice a month on like YouTube. Um because I don't like obviously you guys like pay to be in this mentorship, so you guys get more of it. But I do want to like give value like with these live calls and so people can ask me actual questions. Because it's one thing to like see me trade on YouTube, but to actually see how I actually trade live is a completely different thing. So yeah, that is pretty much that. We'll see how GA plays out within the next. I'll definitely keep you guys updated on this. If this move does play out, this would be a very, very beautiful move. Um, this is why I have multiple pairs in my arsenal. Like I tell you guys, like you can do whatever it is you want to do. All of last week, I wasn't even trading SPX. I was only trading gold. The week before that, I think I was like trading SPX and more of like GU or something like that. I have multiple pairs because I don't have like 20 pairs. You guys can see. I don't know why Nas isn't up here as well. But the only three pairs that I really mainly trade is my like I'm always like my go-to is gold, Nas, and SPX. Those are my babies. Those are my main three pairs that I focus on. Now, GA and GU are like those secondary pairs. If, for example, Golden already made his move, it's not no entry for me on gold, and I knew that the market would be closed. I mean, it's still pumping up right now. Still close to this resistance for me to like want to get into a trade on gold. SPX is just no. XPX, I know XPX not gonna do nothing because stock market not open. So I know SPX not gonna do nothing. GU, GU versus GA, I get more profit from trading GA, so I would rather trade GA because GA has a bigger pip range. And it moves faster than GU, so I like trading like faster volatile pairs, especially with my strategy. So I put a little bit of a risk on the table for this position. Some of the profits that I made last week, since I'm already up super duper, I had a 20 plus R multiple. I could literally risk like 5 R of that a trade if I wanted to. So I'm putting more risk on the table because I want to continuously, constantly flow and build up the account. I can take a big hit if I want to and still be up equity in the account. So that's the beautiful part. Like, if you guys really want to grow accounts, you guys got to be able to put risk on the table. You got to be willing to, like, it depends on what you want to do. If you just want to be consistent and, like, constantly flow, like, if you want it to be, like, let's say, for example, like a 9 to 5, or, oh, well, you'll never be able to say, like, oh, I want to make $2,000 a month consistently. That's impossible. Like that's unless you make $2,000 and you stop trading for the rest of the month, then that's different. But to say I want to make $2,000 every single month consistently as a trader, this is not no 9 to 5 job. Like you gotta, this is not. working at a corporate job where you know how much your annually salary is going to be, how much your pay is going to be, how much your paychecks. This is not that. So you can't treat trading like that. So always have an open mind. Never set like it's something that helps me. Obviously, you have goals of where you want to get to. But why set a limit on yourself? Like, unless you really just want trading to be something side where it's like you just want to make an extra 50,000, and if that's cool with you, boom, you're perfectly fine with that. That's different. But if you really want to like level up, why would you set a limit on what you can achieve? Like, you may in your mind set a limiter at trying to make your first $1,000 or trying to make $10,000 when you have the potential. There's no cap to how much money you can make in this market. So why would you put a cap on the potential that you can make? You can make $1 trillion in this market if you wanted to. So why would you put a cap at 1,000 or 10,000? So that is something to always keep in mind. Just never set limits on yourself to what you can achieve, and just keep on striving to get higher. But like when it comes to me personally, when I trade, when it comes to building accounts, I put risk on the table. If I took in $1,000 account to $3,000 and I was risking $100, in no way I'm going to be risking $100. I got $2,000 of equity to play with, basically. I can risk $500 a trade because I know that if that trade plays out and I risk that $500, it's a win-win both ways. If the trade doesn't play out, I just lost $500 of equity that I'd even like. I'm still in profit in the account. I can withdraw all of that and still be in profit. But if I risk that 500 and let's say I was looking to gain like on average, because on average I'm looking to gain like 3 hour multiples, right? I was looking to gain a 3 hour multiple. That's a $1,500 trade. It took me a while to build up to that 3,000 and I to get that extra 2,000 basically. And I made basically 90% of that in one trade. Now I took a $1,000 account to 2,000, then I took it straight to 4,500 in one trade. And now, boom, now I'm up even more. So now I may risk $1,000 that next trade. And let's say that trade pops off and I get a 1 to 5 R multiple. Now I just took a $4,000 account to what, 10,000? Basically 10,000. Let's call it 10,000. Obviously I know it's $500 off for it, but I just took a $4,000 account to 10,000 in one leap. And now you see how you constantly start building up equity, and this applies to any account size. It could be a $10 account. It could be a $10 account. You could take a $10 account, building up, risking a dollar to $20. You have an equity of $10 in that account. So now instead of risking, let's say $1 or $2, you could risk $2, $3. Now you build a $20 account to $50. Now you're up $40 in equity. You could risk $10 the next trade. Now you take the $50 account to, you see how like that's how people think that you need a lot to make a lot. It's not the case. If you got a skill set and you understand how to manage your trades properly, then you will do that. But the biggest part is if you want to build an account that way, you got to make sure that you have equity in the account. You can't be taking big risk with no equity. Because if you had a $10 is tricky to say, but let's say you had $1,000. If you had $1,000 account and your first trade is $500, you just lost half of your account in one trade. You ain't got no equity to play with. And now you gotta, instead of building up equity, instead of taking those bigger trades and stuff, now you gotta delay that gratification a lot more unnecessarily to build it back up to your initial balance at $1,000 because you can make lose $500 but make $300. You're still not up equity in account. You say, "Oh, I lost." You took the account from $1,000 to $500 and you made $300. Yeah, you made $300, but it's like you're not. That's not profit. If you were to withdraw that, you're losing money. You deposited $1,000 and you're withdrawing 300 of equity that's not even like you're basically taking your money out back into like it doesn't make sense. So the biggest thing is like you got to actually figure out how you want to build it up, how you want to manage your risk. Everybody's different. Some people they may start off like everybody's different with $1,000 account because if I can ask every last one of you guys here, if you all had $1,000 right now, what would your initial risk be starting out with the account? Everybody would say different numbers depending on your confidence in yourself. Even if you have a strategy, if you don't got a strategy, then you probably will risk a little bit lower. Because I can say you can have one person who says they have $1,000 account, and let's say they are risking let's say they're gonna say I'm only gonna risk $10 because they're risking this $10 because they're trying to build up their confidence in their strategy. They're trying to learn their strategy versus somebody who's like, if I had $1,000, I already have a strategy. I'm not risking $10 on a trade. I can guarantee you that. I'm not risking $10 on a trade. Like the confidence in myself, the confidence and know how to trade. If I have $1,000, I know that I can be risking starting out potentially like $200 a trade. But I obviously would scale into it, probably like 100, and then like scale into it and scale it up. One person may be risking like $50 a trade. One person may be risking $25 a trade. One person may be risking 70, 80. You got to determine your risk tolerance. You got to determine your confidence because I know that if I have an initial balance at $200, not 200, $1,000, and I take a $200 loss, I know how to build that account back up. I can easily build that back up to break even and keep on going back higher and higher. That's just the confidence that I have. That's not like pride or ego or nothing like that. That's just like confidence. It's because I know my strategy works. It's not confidence in like, yes, it's confidence in myself, but it's confidence in my strategy. I know my strategy actually works to be able to do that. So once you're able to build that equity, put that risk on the table. Like sometimes you, if you want to break through barriers, like you got to put risk on the table, guys. Like that's the biggest thing. You can't be looking to make $100,000 if you're afraid to lose 1,000. What do you think? You're gonna get a 1 to 100 R multiple with one trade? That's not happening. You're not gonna get a 1 to 1. Like if you risk $1,000 to get a, you have to get a 1 to 100 R multiple, risking $1,000 to make $100,000. I don't know. I don't know. I ain't never seen that. I mean, it's possible. I guess. I guess. I guess. Unless you got the craziest 1 second entry and no drawdown and price shut up to 1,000 points or something like that. I don't know. You use a crazy big lot size. But other than that, like you got to put risk on the table. So that's like the last thing I'll say when it comes to like the actual trade management and like growing accounts. Like if you guys want to grow it, put the risk on the table. But have equity first. Don't put equity that you don't have on the table. That's why like I can take bigger positions now because I done built up so much equity within the past week of my account. So I can take bigger positions and take a little bit bigger of a hit and still be okay with that. Like if GA were to just shoot up right now and hit my stop loss, I would still be in so much equity in the account and I'll be good with that. And it's like I'm willing to put bigger risk on the table to make a bigger reward. That's how it happens. That's what I did with gold. I built up all this equity throughout the entirety of the week. This was a big hit, not a big hit, a big jump for me. So I started using bigger risk. Like I was not obviously crazy big risk, but I used that equity, a decent amount of the equity, not a decent amount, but some of the equity that I gained from here. I was already in profit in the account. So this right here was a big jump. And I started boom, boom, boom. And once I got here, all this equity. So let's put that on the table. Not all of it, but let's put some of it on the table. And then boom, it played out. And I was able to essentially, this is what I mean by that. I grew, started, I was using riskly, like roughly like all throughout this, like kind of like the same risk. I was going up a little bit here and there, but since I just kept on winning, and I didn't take any losses, once I got here, I was up so much that the trade that I made when I made this bigger leap, this right here, this one move right here was more profit than all the days that I made here. That's the type of like jump that happened in the account. This one day was more than all the other days. I wouldn't say combined. Yeah, I wouldn't say combined more than all the other days combined. Maybe. Let me see. It actually probably was. Let me actually look and see. I'll actually tell you guys right now. Let me go to my trade locker. Let's go back here. Actually, yeah, it was. So that one, so this one trade that I took that Friday was more, well, actually, no, it wasn't more than, actually, it might have been more than all of these combined. Hold up. I think that was actually, let me see. Plus, it was. So this one day that I had Friday was more than I had Thursday, Wednesday, and Tuesday combined. And it was such a smaller move because I had so much equity to put a bigger risk on the table. And then on top of that, my entries was like insane. My entries like right here. My entry's like literally like right here. What was it? I believe because I entered like late, like that night, price came down. Boom, I entered like another position here. Price came down here. I entered another position here, and I think I entered one more position here. I don't think I entered this one. I think I did enter this one. I don't remember because I know I was on a jog. And literally I looked down at my phone. I was like, "Yo, this is crazy," and I just closed the position. So that was that. That's how like a live example of what I mean by building equity in account. So now that I build all of this, now I have so much more risk to do, and I'm gonna do the exact same thing this week. I'm not gonna go too crazy because NFP week for me is usually like choppy, so I don't like to go super duper crazy when it comes to my risk. But next week is gonna be lit. I'm telling you guys, get active in the markets because the second half of this year is going to be beautiful price action. Once they cut interest rates, had to be is it next week? I think it'll be next week or the week after, whenever they do their meeting. Once they cut that, every single US pair that's going against the dollar is going to go the opposite direction. Gold is going to fly up, GU is going to go up, SVX is going to go up, XRP is going to go up, everything against the dollar is going to go up. So this is the best time for me, this is what my thought process is for the rest of the month. I'm going to build equity in my account, still taking these bigger, like, leaps. Building equity in account, but after that news comes out and the market starts flowing, I done built up all this equity, so now I can really start like making big leaps for the rest of the year, or the next few months, basically. So that is that. How do you read news? I suck at understanding. I mean, it's that's a great question. I'll answer that. It's very simple. You don't have to overcomplicate it. Like, unless you're some like fundamental analysis and stuff like that. I'm not very big on fundamentals. I just have common sense. I just know what's going on in the world. So let's say, for example, look at this. What were we just talking about? Gold futures, all you do is just come down to here, look at it. Gold futures rise to record high on Fed concerns, rate cut expectations, commodities roundup. This is how I look at news. For one, it's tricky. It's like different to like Spain because for me, I get a lot of my news from the Bible because the Bible tells me everything that's going on. And plus, when you have discernment, you got common sense to know because the Bible tells you all of this stuff, right? Just look at the title of this. And just like if you just look at the title, it can give you an idea of what's going on. Gold futures rise to record high. Fed concerns. Fed is the US. Concerns, uncertainty. Uncertainty means confusion. Confusion means people are not trusting in the dollar, which means the dollar is weak. Literally all of that by just reading the title. I didn't even come down to here. So that's what like it's look at these things that are being said. When anybody is saying like uncertainty for that specific pair, not very certain, that's confusion. God is not the author of confusion. Confusion causes chaos. And when there's confusion going on, look at it in today's society and just like normal society. If you see that the dollar is weaker, and let's say I use jobs for example. If you see like back in 2020, right, when people were losing their jobs from, COVID, remember, it was weak, right? So what did people do? People stopped trusting in jobs and they started looking for their own thing. They started starting businesses or they were complaining. The ones that not let's not talk about the ones that was complaining. People that actually changed. Like for me, for example, I stopped trusting in jobs. When that happened for me, that's when I was in college back in 2020 when that happened. I was in college and I was seeing people that was super duper close to me and seeing doctors who had degrees and who was doing this for and this was I was in Clemson for my first year. I was there for a year and I was like, yeah, I'm seeing people who had 8-year degrees get laid off just like that. I see people who putting in this work. I got family members and stuff that I know that's been putting in so much work, like grinding for all these years, and they get let go just like that. No, I don't trust in the system. I don't trust. Obviously now, nobody should trust in the system. But obviously back then, I was like, yo, I don't trust this. Like, what if that was me? And it's like, I'm not going to be a doctor or nothing. I was going to be an engineer. Like these people, like doctors are much not. I don't want to say more important, but like they have a much heavier job. They had a lot that they require to do, and for them to be so rare and to just get cut off like that. they can do the same thing to me. I don't trust in this no more, so I'm going to go somewhere else. Same thing applies to fundamentals. If you see the pair that you're trading, if the US dollar, if people aren't trusting in it, they're going to go to other assets. They're going to go to gold. They're going to go to crypto. So what does that mean? The dollar is weak. And that's all you need to know. That's literally it when it comes to reading fundamental news. And you understand that is a longer term play. You don't just go from week, and then super duper positive, and all it's like, oh, it's like rainbows and sunshine. It don't work like that. So just by reading that title, I was able to get that much out of reading a title. So when you're reading these news, you don't have to know all the like numbers and all this type of stuff like that. It's dope to like kind of understand CPI is inflation. CPI correlates to inflation. And the higher the inflation is, that's when it comes here. So like let's read this for example. Let's see. Gold futures set a fresh record high on intensifying concerns around the U.S. Federal Reserve's independence, mounting interest rate cut bets, and tariff uncertainty. Interest rate cuts, meaning gold is going to fly. And if you see all of this, everybody knows that interest rates are going to be cut. Like, it's common sense that it's going to happen. So we know we just got to be patient and wait till it happens for gold to start taking off and going crazy. Let's see. Driven uncertainty. Like, just look at these words. Tensions. President Trump's move, Federal Reserve expectation of September. So many times. How many times have we seen this? Let's see. Boom. And that's how I read news. Like, I don't sit here and go and okay, the US 111 blah blah blah. I just look at what is going on. If people are getting confused, if I see confusion, I know that that's weakness. If it's like everybody is talking about like positivity and stuff, I know that's positive. But if you go through these, just look at it. The US dollar trading near its lowest since July against rival, making greenback greenback means dollar, bullion cheaper for overseas buyer. Gold and especially silver extended Friday's strong gains, supported by sticky U.S. inflation, weakening consumer sentiment, expected rate cuts, and concerns over Fed's independence. Literally, this one paragraph is all you need to know. You don't need to know all of these numbers and stuff like that. We're not unless you're like somebody that's a part of that, like, who cares? This literally alone, you see how like I read it, right? I emphasized the sticky US inflation, weakening consumer sentiment, expected. So if it's already expected that interest rates are going to be cut, and this is how it plays into the technicals of it. If we already know interest rates are going to be cut, gold is like going to go up, and we know that is going to continue to go bullish. Um, if it's something like if they don't cut it, then that's gonna be crazy and price will drop because everybody expect it to happen. So when it does happen, it may not be as much of a big reaction in that moment when that news event does happen, but once it's like confirmed, then price is gonna actually continue the overall trend. So that's how I read news. That's how you understand it. Like it's very, very simple. I don't like to overcomplicate it. Um, I'm not the type of person that's, oh, like I sit here and read the monetary policy statements. Absolutely not. I do not go out and read those 20,000 page FOMC statements. I don't know what most of that stuff mean. I don't need to know. All I need to do is have common sense to understand that. Because think about it in technical terms. This is the last thing I'll say. What does uncertainty, like if you're looking at a trend, what would confusion and uncertainty mean trend-wise? Like if you think, okay, bullish, bearish consolidation, what does uncertainty, what would that trend look like? I want you guys to answer that question. It's very simple. I know it's a very simple answer. Bullish, bearish, or consolidation. If there's uncertainty, what would it be? Bullish, bearish, or consolidation? Or like ranging? Consolidation. Perfect. What is going on in the economy? Uncertainty. What is gold doing right this second? Like, not right this second, but what has gold been doing for a while? consolidating. If there is certainty that interest rates are going to be going up or down, then you're going to see clear bullish, clear bearish trend. So that's literally how you're able to interpret news as well. It's like, why is price consolidating? It's waiting on something. There's uncertainty. It's waiting on something to happen. So that is that. That is it for me. That was a nice 2 hour masterclass. Like I said, we're gonna do this a lot more. I definitely want to do this more with you guys. Um, I may even start doing it like on a Sunday or something like that, right? Like when you guys aren't working, like this is for like the mentorship part, but like when you guys aren't like working, maybe on like a Sunday or maybe even like a Monday when we're not doing like the full live calls, or maybe during one of the live calls, I do like a master class like this with you guys. So everybody can actually pull up and we can like if the times need to be adjusted from instead of 9 to like 2 or something like that, or maybe even a late night one, we could definitely do that. Uh, so, I think that is pretty much it for me. Oh yeah, for sure. Yeah, let's do that. Let's do that. Sunday would be dope. Or what if you go back and forth? Okay, cool. Yeah. So, Lakeisha, let me ask you, what time? What's are you in the US EST time zone? Like, what's your time zone? Like, what times are good for you during that? Because I definitely don't mind Sunday. And then Stefan, you can look it's the link is in my YouTube. Like if you go to my YouTube, the description it's right there, the link there. And you can join if you want to, bro. But yeah, let me know what's a good time for you, Lakeisha, and I'll definitely incorporate that more. We could definitely go back between like Sunday and Monday. Let me see, stop sharing. Let me know if you was able to find it. Whatchamacallit, Stefan. Mornings are good. Okay, perfect. Like around like 9 o'clock. Okay, cool. Yeah, so we'll do that. Yeah, we'll do that. We'll do that. Just next time that we do it, bet, bro, bet. So whenever we do it, like Friday or something like that, just let me know what you want to go over. We could definitely do like a more because if we do it on Sunday, then I'll be able to actually do like you guys will see my pre-market analysis, like my full top down, of how I look at the markets on like a Sunday. We can go through some pairs as well, any pairs that you guys want to go over. Uh, I appreciate you so much. Thank you so much, Lakeisha. Thank you so much for that. But nah, definitely welcome Stefan. Welcome, Stefan. I definitely appreciate you pulling up, bro. Let's get active, man. Let's continue to keep growing. I'm going to see you guys tomorrow because tomorrow's going to be the actual live call. So I'll see you guys tomorrow for the live call, and I will update you guys in the chat with this GA position. It's 1 o'clock now. Well, not 1 o'clock. It's 11 o'clock. I will go to the gym, and by the time I'm done with the gym, this far we can will close, so that would at least I don't gotta sit here and stare at the charts for forever. So that's one thing I like to do. I like to go to the gym and work out whenever I'm in the trade, so I'm not just sitting here staring at my screen. So other than that, I love you guys so much. Appreciate you so much for this. Appreciate you guys for the suggestion. I will see you guys tomorrow for our live call, and hope you all have a blessed day. Have a blessed one. Have a blessed one.